Hi, everyone. Today's Thursday, May the 29th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are looking at the Globex Open being a fair bit wider than yesterday's Globex Open, which was very compressed. And what we did immediately was make the opening range and then rocket out over the top. This is unusual for us. Normally, it's a little wiggle and then we move if we have continuation, but not so. And so the strategy says, hey, if we break out of the opening range, look to the left, see where you can find support at prior opening ranges or near-term resistance support, whatever, something that gives you a floor on your risk, and you take the long. And that did well until we stopped heading higher at about the 6,005. Notice at the beginning of the week, I marked the weekly implied volatility move at 59.88. We blew past that, tested 6,000, and now we rejected it. So the question is, how do you set a trade up right here at the short near this 6,000 area? Now, immediately, you could short as it came into the level. But if it continues to pull back and bounce, it's not really the right time. So you can sit with unmeasured risk to the upside. I suppose you could find it somewhere in the past. Let's see if we can find that.
Order filled.
Oh, very good. That's the end of a trade. So we could find that in the past somewhere around here at 6,005. And you could do that. Oh, look at that. I promise you, I did not plan that. That's great. So I've been in a short. You just heard it close. 59.54 is the level that I was looking for at the first pass. I do believe it's got more downside traction into the middle of that opening range. But if you try to take the short up above this weekly implied volatility, you may have gotten chopped up. And, you know, that's almost 20 points of risk depending on where you took it. So the better bet, if you have the patience, is to watch it stabilize, and then when it stops heading higher and starts breaking the new tighter support zones, that's up here at 59.94, then you look for the failed break and you got yourself a short. That should really run into the lower edges of the formation. Dips are buy zones. Momentum has shifted negative over the last hour, and so you can tell that they are trying to find support. Okay, the 59.45 number is the number we should be able to retrace if we hold that floor. Otherwise, we could go to the bottom of the range at 59.16. It's very sideways in general, but the dips are buys, so be patient and wait for price action to come to you. Okay, for me, I'll be looking for long action somewhere around the midline of this opening range because the breakout was so significant. So I'll be looking at this high volume candlestick high, which is 59.32, high volume candlestick low. What is that? 58.94. I'm going to watch it try and gain traction right here at this downward candlestick formation to see if the traders have recovered. So the next place for long would be down at 24. You might say, oh my goodness, why can't I take it short there? You can, but unless you choose an arbitrary risk event, it's not going to work in your favor. All right, weekly implied vol is what we want to look at now. It's 59.88 on the upside. It's 58.44 on the downside. Not really seeing that on a pullback event, but the low edge of the range does look like yesterday's low event at around 58.91. Now, could the world go sideways and whatever happen? Absolutely. Absolutely. Your job is to find a level a lot of people are looking at, and I've defined them for you right here. And once you found the level, wait for the level and then set your risk and then take the trade. Okay? Could you put a limit order out here at 59.26? Yes, You certainly could. I will be on Mentor Q's website today. We are going to be going over the new TrendSpider tools, which is so super. I'm so excited for that. But moving on, and that starts at 11 a.m. and then we'll have our that starts at 11 a.m. So here we are, NQ. Taking a look at the NAS, we've got a pretty wide opening range, right? That's over 100 points. So pretty big move. And having the same inventory correction event, notice, flew up into the same implied volatility measure for the week at 21,783. Let's go backwards and see if we can find a prior high. That would be these wicks right here. Let's see how close they got to them. Coming back here on the 1 hour. I just looked to the left. I didn't quite get there, but 21,867 was the breakout area. Now, if you're thinking about going short right up at the top there because it's got the weekly implied vol, you don't have any idea of what your risk is supposed to be. If you choose, okay, I'm going 10 points, it's completely arbitrary. Completely arbitrary. You have to wait until price action shows weakness and then take the trade short. Implied volatility for the day, 21,713. We just got inside that. Trend sharply up, right? Trend also from the moving average up, but we are far from that moving average. Would I be surprised if we gave up some of this? No, I actually wouldn't. But if we hold the top of the opening range, we've got 21,597 as the entry point. Let's take a look at the high volume candlestick of yesterday on the 1 hour chart. Pretty wide range, right? But if I'm looking for a long next, my clean areas of support are going to be around where all these traders that went short got caught flat-footed and it turned around. So I would like to see long action somewhere around 21,514. The low end of the implied vol move for the day is 21,306. The trend is positive, though we are in a mean reversion event. Momentum is slightly negative, telling us that is what we are doing. And of course, our zigzag pattern, I mean, it blew right out at the zigzag, right? That is a really expanded move. So coming back into the zigzag ought to be what we end up doing. Now notice, for this NQ, we have a tendency to break out of these zigzags. And let me see if I can shift. Nope, that's a horizontal line. Let me see if I can shift the metrics on this zigzag. Deviation. How about 1.5? Whoa. All right, that really widens the space. I don't love that. Let's use 1.1. Yeah, not a great way to check this one out. Let's see if 1.2 gives us a little bit better for this one. Yeah, pretty wide pattern. Pretty wide pattern in general. Let me see how that changes for the ES. Wow. Yeah, I don't like that at all. We'll leave it at 1. I'll play around with that a little bit later and we'll see what we can do. But everything's just rocketed out of their measured moves. And you can tell that that's people caught on the back foot, right? That's, to me, that looks like a squeeze. Okay, so downward targets. I don't know that we need to think about anything other than buying the dip, unless you're doing a scalp trade, until it gets below that 21,487. And I still think it bounces from there, right? This 1 hour candlestick with all this volume in there, that's going to tell the tale. But we are bouncing right through a zone, so we'll see what gives next. Let's take a look at the YM. The YM, trend up, with both, right? Moving average and the zigzag pattern, what we have here coming back into the opening range and trying to bounce out. Now, here's the thing. Moving average support, trend line support in the zigzag. Once it gets up over 42,340, it's a long again, right? Momentum currently downward. And interestingly, this candlestick right here with the long action formation, that's the one that's got all the volume in it. It's got more volume in it than the bullish one. Than the bearish one. So let's put a line there and keep an eye out. If you take the 42,340 on the long, you've got about 35 points before something gets a little wonky on you. Okay, so that being said, the opening range is, let's see. The opening range in the YM is about, 200 points wide. That's a pretty big deal, right? Notice it's still fading. So when you're staring something down like this and you go, ooh, maybe I could take the long right there, your brain really needs to focus on what might be happening with these other candlesticks that are carrying a lot of volume. Deep dips surely should give us the buy zone. I would wait. Maybe you choose a buy stop up there at 42,340, or sit here and wait for a limit order at 42,136 with a stop that's about, that's a lot of risk. I would wait for it to lose this level and then bounce back and fail it. All right, but very nice retracement. My thought, short sellers getting caught flat-footed. That is the storyboard. The narrative is so negative on social media streams that it's really making for shorts to be on the back foot all the time. All right, let's take a look at Bitcoin, the micro Bitcoin chart. It looks a little bit messy. Let's get rid of this Fibonacci, right? And what we are seeing is the following. Trend shifted upward. If you remember, it was downward yesterday. Now, my suspicion is that it's still downward. My eyeballs tell me that this is what's happening. Now, are the traders very easily swayed to the bullish side? Yeah. Why not? A lot of people are very bullish Bitcoin. We're above the opening range. We bounced well above it into prior heavy congestion. We pulled back and held the opening range low after coming in and testing it at 107,000. I still think that's the right buy zone today. Okay? I've got the 2-day implied vol move because the move's been so savage. That area is 109,500. But the daily implied vol move is down here at 108,150. And so this tells me I could easily fall back into trend, which is downward. Now, why am I saying that? Well, I'm seeing lower highs, and I'm also seeing lower lows. And my moving average is downward. But very interestingly, the zigzag pattern is showing us with an upward drift. So we've got a clear cross current. And look what happens with cross currents. We completely retrace moves before they grind in whatever direction they're going. Oh, look at that. That's so funny. We're going to see it move right in front of us if we lose this edge right here at 108,500. We'll slip back into the negative trend and it will continue downward. So don't fret if you look at something like a zigzag pattern and you go, oh my gosh, it moves all the time. Just relax. Things flow. Okay, just let them flow. Low end of the implied vol move, 106,759. That was a pretty nice buy zone for me yesterday on fast markets. I did buy this area about 107, and left at about 107.6 for about 500 points. But yeah, it worked very, very nicely. So that being said, is the chart potentially recovering? Yes, we had that Bitcoin conference, a lot going on there. I have no idea really which way the chart is going to run. But what I do know is that if I have negative trend and I breach that, I should come back to make another higher low that will get me in the trade. So I like the long from 108,150 with a stop that's about 100 points wide. Otherwise, we slip into the opening range and we get back down to 107,000 even. Okay, pardon me. Got chia seeds in my throat. All right. So let's take a look at oil. Same storyboard, right? Everything moved up in tandem. Now retracing. There's a ton of inventory correction going on this morning from the overnight trade. What is this? Okay, so that's a VWAP. I don't know how come I haven't been seeing it on the other charts. That's bizarre. Okay, eyeball's not watching properly. What's trend? Flat to up, right? We've got a rounding bottom. What is momentum? Negative. Traders are trying to find support down in that upward trending event. Where might it be? I like it at 61.76. But let's take a look at the highest volume candlestick of yesterday. We're going to see it's right up there near the measured implied volatility move of $62.57. The low end of the move is 61.08, but this volume zone, this area of heavy volume, we're right in the middle of it, so I would not be surprised if we got back down to 61.59 and then move. Now, here's the thing. If we hold the VWAP, then, breaking out above 62.14 is going to give us some long action, right? In about 15 minutes, we've got the jobless claims, and traders are probably going to play into that, but those numbers are just estimations. It's all calculations and people just running with whatever narrative they want to. So that being said, deep dips, buy zones, I like waiting for 61.59. However, getting up over $62.12 going to give us the motion that we're looking for, right? Let's take a look at gold. We are still in rollover, so we're in the GC3 contract. This one's still running with a clip, right? Hourly formation, in my mind, still negative, right? That's the trend line. So how do you run with a trend line if you're staring something down? You wait for it to fall right back into the trend. So what did the moving average say? Trend is down. What does the zigzag say? Trend is down. What does momentum say? It's moving up into resistance. Fairly wide opening range as well. We broke below it and now above it, which is fairly unique. What could this be? Some kind of ugly megaphone, right? We could really be looking at a very ugly megaphone. And how would that look? If I'm just eyeballing it, trying to get as much as the candle highs as I can, I would say right into the implied vol move of the day. Wait to see if it can double top at $3,337. That would be a nice short. I really like that area. Otherwise, it could stop at the implied vol move of the day. It doesn't really like to, though. It'll blow out of them all the time, right? So we are really looking at some big picture events that show there's a grinding motion to the downside as we sit. Could you jump in front of the trade here and take the short right now? You could. But, we've got jobless claims in front of it. Why not wait for where everybody else turned over and say, you know what? I'm going to take the short there. I'm going to see if it can move right out of the edge and then rotate back down. Okay. Lower levels. Implied vol move to the south. $3,291. Implied vol move to the north. I mentioned that, $3,331 with a push into $3,336. That's my thought about the possible move. Here, you can see this is a Fibonacci also. 3350 is in line, but you know, I don't think they'll get there. In my mind, there's probably a stall coming here somewhere, right? Especially if it keeps this trend formation. So wait for it to collapse around that edge before you get in, or you can expand your risk. Let's take a look at SPY. Gosh, this morning I just have not been crisp. My apologies to you all. Okay, here we are at SPY. What's the trend? Flat, right? What's momentum? Bullish but fading. We are sitting at old resistance, new support. The highest volume candle of the day yesterday has a high at 590 and a low at 586. You know, you could eyeball that and go for the middle, and that actually gives us this range here at 589. That gives us some room to move. My suspicion is, though, that it begins to bounce here. So if you're thinking to yourself, hey, I want to take a long right here, nothing wrong with that. Absolutely nothing wrong. Your target first would be to get above the implied vol move measure of the day. That's $593. And if you can get above that, then potentially into the low of the opening range. Okay? That being said, if it cannot hold that 591.80-ish area, we should retrace this full-bodied candlestick with a primary target of 589. All right, let's take a look at the Qs. Okay. I don't know what that knows. I don't know what that wick was. Something's going on. Prior day's high volume candlestick right here, 522, low of that area, literally gives us the bounce zone. I mean, it comes right into it. Not a coincidence. What's trend? Flat. Zigzag, positive. What's the big picture? Potential breakout of this range, right? If we fall back into 522, we may spend a week or so collapsing back down into 505. We've broken above the weekly implied volatility that I measured on Sunday night. So that's what we're staring down, right? That number is what we're going to stare down. And so if we can stay underneath 526, we have downward pressure that takes us back to 518. If we can hold the 524 implied volatility move, we'll move back into $529. Upward measures on the implied vol move today is 536 on the upside and 524 and some change on the downside. Matches with old resistance, new support. So we've got ourselves some action right there. Momentum, green, so it's positive. Dips or buys. Just have to find the right dip zone and wait. And don't get your knickers in a twist trying to rush. Okay? So slow is fast. That's how you build your portfolio balance. All right, everybody. My apologies for not being as crisp this morning. My brain is in a bit of a fog, but I'll see you all soon, and hoping you join me on the Mentor Q platform. Take care.